Welcome to the Pursuit of Property, where we have uncensored conversations about business, economics, and philosophy. We believe that life, liberty, and the pursuit of property are just as important today as they were in 1776. This is your host, Max Reimer. I'm one of the co-founders of the John Galt Mortgage Company, and I love discussing big ideas. All right, let's dive in. Welcome to the Pursuit of Property podcast, sponsored by the John Galt Mortgage Company. I am one of your hosts, Max Reimer.
And I'm Andrew Shermack.
And we got an episode for you today. We are going to be talking from the state known for its fraud about mortgage fraud, which has been in the news a lot lately. You have different politicians being accused of it. And in fact, some indictments and things of that nature coming down. We're going to go through the most recent 4 examples that I think were initiated by Bill Pulte in the Trump administration. Andrew, does that ring true?
Yep. Yeah. The mortgage fraud is pretty much the easiest fraud you can detect nowadays if you really have political rivals that you want to go after, which that's the flavor of the day in DC. So that's the low-hanging fruit they're going for.
And we should say I attended a conference. We're sitting here in the end of November, basically, or getting to the end of November. I attended a conference about a week and a half ago where Trump's FHFA director, Bill Pulte, was one of the speakers. And as Andrew and I go through this podcast and some examples of mortgage fraud, we're not making any legal judgment here because, quite frankly, I'm not sure that Bill Pulte is fully sane or has his mental faculties. This was the guy who proposed the 50-year mortgage, who said Fannie and Freddie was going to start buying more companies. And I did read today that Bill Pulte, as part of the Trump administration, has not tweeted in over a week, which is strange for him. So with all of that said, we're excited to kind of dive in. And obviously, mortgage fraud is not something that Andrew and I talk about regularly. It's usually something that doesn't come up that often. It sounds like, Andrew, we might want to talk about a case where you had some potentially come up or something along those lines we'll get into.
Let me just jump the gun on that and say that my client did not commit mortgage fraud, but the lender looked into it because they thought this case looked suspicious, and we were cleared because we were not. Here at JGMC, we do not commit mortgage fraud.
We do not commit mortgage fraud. That's our pitch.
I just had to make sure if someone didn't listen to the end of the episode, that wasn't your takeaway. These guys will commit fraud for me.
And welcome to JGMC, where we don't commit mortgage fraud. It's about the bar that we're working with right now. But mortgage fraud, really, it's not something that comes up that often in our conversations, but usually you're kind of knocking out the different types of mortgage fraud for your exam, which both Andrew and I had to go through and learn, whether it's a straw purchaser fraud or income fraud or occupancy fraud. There are different ways to kind of game the system when it comes to mortgages. So, Andrew, if you could, what's been your experience, not with mortgage fraud directly, but your knowledge of it and, the situation you described earlier?
Yeah. So occupancy fraud is going to be the most common form that you see out there. And quite frankly, it's the easiest to catch. The reason borrowers are incentivized to pursue that type is because you get a way better interest rate. You save money on every monthly payment. If you can list your property as a primary, it's primarily occupied versus like a secondary or an investment property. And it's usually to the tune of around if it's a primary residence, your rate's probably sitting at 6.5. But if that's a secondary or an investment home, you're probably at 8% or 8.125. So there is a big difference there on that. And so on these politicians that have been kind of coming into the spotlight in the past month or so, it's probably really common in Washington, D.C., which it shouldn't be, but it is because most politicians, especially at the federal level, they do have 2 residences because their district where they live may be out in California, and 3,000 miles away in D.C., they have to spend half their year there. And I think that's I think in all 4 of those cases you just listed, they were listing a secondary residence as a primary residence. Because again, they did that very intentionally. That's not an accident. You probably have to fill out 6 or 7 different disclosures and forms where you are claiming you are going to live in this property full time and not rent it out or so on. And so it's whenever they say, oh, I accidentally filled that out, it's not true.
Right. So let's dive into it, because you referenced the 4 cases that we had, and it's roughly over the past year here, but it's become pretty apparent that this is almost common practice. It seems I wouldn't be shocked if we discover other politicians or other political figures who have done the same thing. But as we get into it, the first one that I wanted to cover was Lisa Cook, who is a member of the Federal Reserve Board of Governors. On August 15th, 2025, so not too long ago, the FHFA Director Bill Pulte accused her of mortgage fraud, specifically alleging that she claimed 2 different homes, one in Ann Arbor and one in Atlanta, Georgia, as her primary residence in 2021 to secure more favorable mortgage terms. So with that, she has been under DOJ criminal investigation. And Andrew, obviously this seems like a kind of a cut and dry case of occupancy fraud. Do you see any other, because we both looked at these examples, do you see any other fraud associated with this case?
I mean, from what I looked into it, like kind of with the headlines I've been reading and the articles I've read, it looks like it's just cut and dry. She just committed fraud on how she declared her residency on the home she was buying. If there's income stuff behind it, maybe so. Because if I recall, because she's the one that went after Trump on his felony charges, correct?
That was Lolita James, who we'll get into in a little bit.
Oh God, sorry, I'm crossing wires here on it already. Okay, yeah. So again, another case of the fraud there. But yeah, I believe these are all just. I don't think there's income fraud from what I've read into it at all, which is where they're. Again, usually you actually have to be kind of sophisticated to do that, because that means you're actually like forging income documents for it, which is that's why that's a lot more rare to see, because again, you actually have to have a certain level of sophistication to try to pull that off for it.
Right. As we go through pre-approvals, even, there's layers upon layers of financial data that we need in order to make sure that you can pay a loan. It would seem to me that beyond signing a bunch of disclosures, that actually proving those bank statements and W-2s and things that we have to collect, it almost seems like it'd be a little bit more nefarious. Maybe that's the wrong word.
Oh, it is. Yeah, it's a lot more intentional. You have to go to pretty extreme lengths to pull off like income fraud like that, which again, I think it was a lot more common to see that pre-2008, before like all the Dodd-Frank financial reforms going into place, kind of overhauled the mortgage industry. Nowadays, I think that's, if I had to guess, I would say that's probably extremely rare.
So when you had mentioned before all the disclosures that are needed to sign in order to prove occupancy or claim that something is your primary residence, is there not a way, like in the case of Lisa Cook here, is there not a case where you can cross-reference other primary residences that they have across the country? I'm just wondering why this is so frequent.
Yeah, so like earlier this year, actually, and that's why I think there's actually been like a year-over-year increase about 8% in mortgage fraud from 2024. And again, I'm just doing a little guesswork here, but it's probably associated with like a Palantir actually partnered with, in like I believe it was in March of this year in 2025, with Fannie Mae to help them in their fraud division, just to do deep dives, do like profiling to try to catch fraud before it even. Before it's technically been underwritten and is in force, and B, existing mortgages that are underwritten by Fannie Mae, to go back and look into like mortgage fraud cases. And it's probably really easy for AI to detect these. That's why I think that there's going to be a lot more of this coming up as I keep doing deep dives into these files, because there's been a few times, even over the past year, I'll be talking to someone and they're like, well, my plan is I'd like to buy this property and I am going to live, it is going to be my primary residence next year, but right now we're probably just going to Airbnb it or rent it out for the first year. I'm like, don't do that. You're going to get caught.
I was just going to say, at that point, you as the loan officer, you are immediately shutting that concept down, right? Like, Is that where the problem lies, right? Where like there are lenders or loan officers who are willing to let them get away with something like that?
But I there must be, because some people just think it's like really easy to get away with, and I always tell them you're going to get caught doing that. I guarantee you that there are AI tools scrubbing every rental database online. You will be caught if you're trying to get away with something. If you declare it as a primary residence, your butt better be in that house on day one living there, because you're going to get caught in the year 2025. And that's why I think this is just the most common form that we're seeing here.
If we're not Lolita James, or if we're not Lisa Cook, or some of the other examples that we're going to get into, which are more high profile, in your experience, how do they investigate this? Do they actually have someone go and check your residency, or how would you get caught?
Fortunately, I've never had a client run into this before.
Well, that is fortunate, yeah.
But I have to assume that there's probably some like kind of triggers online. Again, there probably are, like, they probably have some AI tools just tracking to make sure that, like, again, your property address isn't being posted online like Airbnb or any of those like short-term rental websites. And if something like a secondary house might be harder to trigger, I know I have heard of like they will sometimes do like kind of random audits of it where they'll have someone go check, but I'm guessing they probably have to be tipped off ahead of time.
Sure.
Ahead of that, they're probably not just like driving out to random houses just to see if anyone's living there full time if it's listed as a secondary residence for it. But that would be ultimately what they would do if they were to suspect it. They would actually send out a private investigator to look into it, and then there probably would be formal charges brought forth at that point. But I'm guessing AI is doing a lot of the heavy lifting now. I'm not really sure what they were doing 5-10 years ago to look into that, though.
You and I were talking that we both think that the actual rise in fraud cases, be it mortgage fraud or tax fraud, is going to go up just because we're going to be less reliant on the human capability of doing these things and more reliant on AI, which will catch en masse, you would assume, random red flags.
Yeah, I mean, I hate paying taxes as much as the next person, but trust me, guys, whoever's listening here, you want to pay your taxes because you better believe they're going to be using every AI tool imaginable to collect their tax revenue.
I think your libertarian, hyper-conservative folks were all encouraged when it was like, we're laying off massive numbers of IRS employees, but at the end of the day, we're replacing them. We're going to replace them with machine learning.
With machine learning that's way more efficient and way more effective.
And less costly.
Yep.
So the next example that we're going to get into also appears to be on its face occupancy fraud. Again, that term occupancy fraud, meaning that you're claiming a place where you don't actually live as your primary residence to secure a more favorable rate. Lolita James, the Attorney General from New York. People will know Lolita James from the prosecution of Donald Trump in terms of getting favorable bank loans and a number of other things. The 34 felony convictions that Donald Trump went through during his presidential run. However, there is one little nuance to this one as well, because a federal grand jury also indicted James in Virginia on counts of bank fraud and one count of making false statements to a financial institution in connection with a home purchased in Norfolk, Virginia in 2020. So here, it seems like we have two potential cases of mortgage fraud.
Yeah, and it's safe to say on that one that the president or his Department of Justice has a bone to pick with her. So she's probably cooked.
Because it's Banana Republic, kangaroo courts, and we'll see what happens after that.
Yeah. Yeah. And I even on, you referenced Trump's like 34 cases of fraud. Again, it's a little foggy, like specifically what it was, but from my understanding, wasn't it all the same, stemming from the same initial like case of like an appraisal where like a home was appraised for way less than it originally was, but it was just on 34 different disclosures. Was that kind of sound right? That I remember hearing that And I think it was something like that. And that's why I said there's so many disclosures you have to sign when you're buying a property or going through a loan for it. And if I recall, I think they pretty much threw like a felony offense at every single disclosure where the appraisal was brought up on it. It was something kind of like that. And that's why I say like, it's really inexcusable to get away with like fraud. Like when it comes to occupancy fraud, am I going to live there full time or not? Again, I can't speak to Letitia James as like her like bank or bank fraud. I mean, it wasn't like wire fraud or anything, was it?
No, it looks like bank fraud and count of making false statements to a financial institution. So I suppose that could still be, that could probably be occupancy fraud as well, where she's lying to the bank about what her primary residence is.
That's what I thought it was.
On top of the actual charges regarding the mortgage, it looks like there's been two more charges because maybe she lended with a bank or she got money from the bank.
Yep, that's probably how it's correlated then. Again, bank fraud in the sense that she obtained a much better interest rate from that or financing terms from that bank because of her stated like fraud of her occupancy.
Now, each one of these are like pretty high profile people where it would seem like you would be above reproach. And maybe that's a joke when I'm talking about politicians, but when somebody commits fraud, it's almost like you would think they would know better as a politician. And I'm wondering, like, how common practice is it for loan officers? Probably not banks, because banks, even though we complain about it as loan officers, banks seem to be even more regulated than we are as a brokerage. But are these politicians being coached, or like, is it a cute way? Are they trying to, the people actually in charge of originating the loan, are they trying to coach these politicians on how to talk about their mortgage so that they can get away with it? Because it seems like we have 4 examples here. We'll probably have much more, by mid next year. It seems to me that they shouldn't be doing this. It should be obvious they shouldn't be doing this.
Right.
Who's coaching them on this?
I'm guessing that they're probably in cahoots with whoever their lender was in those cases, because like when you read, I don't know if you guys have like, if you even spend like 60 seconds reading the cases for like Letitia James, like Adam Schiff, like Fed Governor Lisa Cook, and so on, it's pretty obvious on the surface that they're like what they were doing here, just because like most politicians usually do have secondary residences in like the capital, wherever they're serving versus where their district is or so.
Right.
And I think if like Letitia James, wasn't hers like in a vacation town too? It was like it was like, I think it wasn't even, it was somewhere it was extremely obvious. It was not like her primary residence in New York where she's the attorney general. But like, and I think a lot of people just assume that you can get away with it because that was always what it used to be before. But again, things like this are going to be busted wide open in the new era that we're living in. And lenders are starting to get a lot more strict with that, where again, like I think underwriters are probably trained. And I have a good example of like a real case of this where they suspected it was, but it wasn't, for one of the clients I was working with last year. And I think even underwriters are starting to be trained better on like how to detect this. And like, again, in those cases, it's very clear to me that like their lender was in cahoots with them on it, because it's so inexcusable for those ones.
Now, the one difference in Lolita James's case as well is that of this list that we're going to go through today, Lolita James is the only one who's been indicted, not under investigation, but actually indicted. So to use your words, she's probably cooked. All of these are alleged. We should also put that disclaimer out there. We are not making any legal claims about this. We are just speculating.
Yeah.
As it were. The next one, probably the most high profile one here, is a guy by the name of Adam Schiff, who is a senator from California, was one of the leaders of the whole Trump-Russia collusion narrative. He got his name big that way in the House. And again, not surprising with all of these, I think you're noticing a trend, is that it appears to be another case of occupancy fraud. And we can keep going through the details of each one of these cases, but Andrew, I do want to get back to, you had mentioned that you kind of had a real life story about something like this. Are there any details you can share about that?
Yeah, I'll change the name and the locations of it so I can kind of give more details of the story. So let's just call her name Sarah, and she's buying a home in Tulsa. So Sarah, real client last year, and she was looking to buy a house. She lived in the outer suburbs, like a big kind of, I guess we call like a mini mansion, like a big house in the outer suburbs of Tulsa. And she had a very good job in the inner city of Tulsa, and she wanted to move to the inner city of Tulsa. So she was looking, and kind of life got a little, on her personal side, got a little crazy, where her fiance that she was living with, they called off their engagement, and all of a sudden they had this big house she didn't need a big house anymore, and she was looking to downsize and move into the inner city closer to her corporate job for it. Because usually when the older you get, you try to get out of the inner city, out to the suburbs, into the big house. And she was buying this new house without selling prior to selling her old house. So she was going to buy it without a contingency, just float both mortgages. So when she bought her new house, then she was going to sell her big house out in the suburbs. And so on the mortgage application, she put that this new house that was like literally half the size of her house in the suburbs she was living in was about half the square footage, much older because it's in closer to the inner city there, closer to where her job is. And so the underwriter saw this, and one day I looked at it, and I noticed that they changed the occupancy of the house from primary to secondary. And I was like, hey, you just worsened our interest rate by like 1.5 points. What are you guys doing? This is her primary residence. She's looking to buy this house. She's going to sell this other house. And they just flat up told me, no, she's not. This is clearly fraud. Like, you're telling me she's moving from this beautiful house out in the suburbs into a house that's half the size in the inner. Like, she's clearly buying an investment property. And I was like, no, let me tell you the backstory and what happened. Because it was truly kind of like a crazy, like,
yeah.
But I knew it was true because I knew who this person was. So I knew she was like telling the truth. And I had to like work my way up the chain of command with this lender to get like kind of escalate it to a higher level and explain it to them. And they kind of were talking to me like a junior high principal to like the class clown of like,
really? So there was even like a cloud of guilt
where they're like
surrounding you
or we
during
had
that conversation
where because they were honestly, they genuinely were like, if we are going to keep an eye on this house, and if she does not sell this other house,
oh my gosh,
we are going to cut our ties because again, banks are getting very nervous about occupancy fraud. For some reason, I'm stumbling over that word today. But they don't want anything to do with it, and that's why I say their underwriters are trained to kind of look at these things, because truthfully, to that underwriter's credit, it did look like
right. Yeah,
it did look vacuum, weird.
I get their point. Yeah,
I mean. And so, like, that's what I'd say. Like, it'd be like, it really would be like, what's in the Twin Cities? What's like the nicest suburb in the Twin Cities? Like Eden Prairie? Like, I don't even know. Like, what would be?
It's probably getting to be. It's probably getting to be Carver County, maybe
like Chanhassen or Chanhassen or something.
Carver County. But historically, it's been Edina, right? Edina, sometimes Eden Prairie.
It'd be like if you had like this big, beautiful house on a golf course in Edina, and you're looking at buying a house half the size that's 100 years older in Minneapolis, close to downtown. They'd be like, sure. Oh, what? and so that's kind of what like the Minnesota analogy of that would be. And they looked into it. We had to get a signed letter from her, like a letter of explanation stating that like, this is what I'm doing. And and again, they kept an eye on, and I told her, hey, just let me know when your house goes under contract and sells, because I'm kind of in the crosshairs on this one with the lender, because they genuinely like are suspicious of this transaction. Yeah. And that's the only time I've ever had a lender genuinely like flag a deal that was not fraud, but they were very like concerned that it would be. And I see it from their perspective on it. Cause it did look kind of weird, but it was just a weird scenario that she was going through in her personal and professional life. Yeah. And so, but yeah, so that being said, don't commit fraud, people.
That's right. That is the takeaway from this podcast. And then lastly, obviously we just talked about Adam Schiff, the U.S. Senator. He is currently under investigation for mortgage fraud. Again, another case of occupancy fraud. There's not a whole lot of diversity within these examples that we had talked about of the type of fraud. And then the last one, similar position, somewhat high profile, actually ran for president and was not successful in doing it. It's the U.S. representative from California, Eric Swalwell, who I think has
when did he run for president?
Did he run in 2020?
I don't even know.
Yeah, he ran in 20. Yeah, because
that's how unsuccessful he was.
Yes.
Yeah, I follow politics, and that's how unsuccessful he was. I didn't even realize he ran. Okay.
No, basically, Eric Swalwell was known for just super cringy moments on the debate stage, and just having, generally speaking, the most punchable face you could possibly imagine. That's how I think of Eric Swalwell. But another, if you will, kind of hardcore Democrat in the U.S. House of Representatives, also under investigation by the FHFA for, you guessed it, occupancy fraud. And I do find it interesting that both Eric Swalwell and Adam Schiff are from California.
And what's
going on in California?
Again, I don't know the inner details of the cases, but I'm assuming that they bought condos or townhomes or something in D.C. and tried to claim as primary resident. Is that correct?
Yeah. So in the case
insane that they even got to the closing table with it listed as a primary residence when you're a senator from California.
Get this. So obviously a home in California, but the details of this case is it's a $1.2 million DC home, which is under scrutiny with a classification of primary residence versus rental investment. And being in the state house myself, I'm not one that lives super far away from our state capital in Minnesota. I get to be home every night, but there are a number of representatives who live 4-5 hours away who then basically get an apartment or a housing complex of some kind during the 3-month period that we're in session. Mm-hmm. And to your point, it's like none of those people would classify that residence, I don't think, as a primary residence. I know Congress stays in session a lot longer, but it's a $1.2 million home. I mean, yeah, we're not talking about
that's like 3,000 miles from your district where you represent.
Yeah.
So, yeah, these aren't exactly like hard ones to prosecute from what I'm understanding, and I don't think this is going to be the end of it because there is a common theme of the party here that's being targeted, and if the administration changes parties in 2028, we're probably going to see the exact same thing happen just on the other side, because I am guessing this goes both ways.
A war of the mortgage frauds. And actually, I think weaponization of justice is a term that's kind of been overused on both sides of the aisle. But it does seem to me like, especially like I said on the onset of the podcast, that because I think Bill Pulte has kind of got a screw loose, it almost seems to be low-hanging fruit, like not hard to find this stuff and actually make it look like it's bad.
Oh, I'm sure he probably has seen, my guess is they've probably seen people on their team with the same issues, but they just are probably looking the other way. It just probably goes right in the paper shredder, would be my guess.
Right. Well, folks, moral of the story here is don't commit occupancy fraud. If you are looking to get a rental or investment home, label it as an investment or rental home and take that 1.5 or 2 points extra on your interest rate.
And AI isn't only coming for your job, it's coming for your fraud.
It's coming for your fraud. Again, we're reporting from the state of fraud, Minnesota. But that has been like the 4 examples that we wanted to cover today and kind of explain to you what type of fraud it is, why these people are being brought in for investigation or straight up indicted. Andrew, do you have any kind of closing thoughts on mortgage fraud or anything else?
Well, I think that it'll probably start getting busted a lot earlier during the underwriting process going forward with all the AI tools that lenders are going to be using. So don't even try getting away with it if you're even thinking about it, because you won't get to the closing table going forward.
Well, this has been today's episode of the Pursuit of Property podcast. I'm your co-host, Max Reimer.
And I'm Andrew Shermack.
Until next time.